Well, good evening once again. This is Mark Espy, also known as the Robinhood Trader and partner over at MarketTamer.com, the premier stock and options trading website in the universe. Before we begin this evening, I must tell you that anything that we speak about this evening is for educational purposes only and never to be construed as a recommendation to buy or sell anything. Please remain within your own risk tolerance and do your own due diligence. We're looking at the Dow Jones Industrial Average, and we have formed a cup and handle here. So a fairly prominent handle has formed here just beneath this resistance that we see right here in green, and that is located at 10,440 in that neighborhood. Should we break through here, and actually this pattern is a bullish continuation pattern, should we break through here, I would suppose we would come up here and retest the high that was put in mid-January, and that is at about 10,700. More likely, though, I feel that the index is going to come back down here and retest this low that was put in here, this spike low at 98.35. But we have some other levels we need to be aware of. This level that we see right here on the swing high is at 10,314. We have this level that was put in back here in October, and that's 10,119. We have this level here, the swing low, which was put in early November, and that is at 96.79. And then we have this level here at 94.30 and again at 92.53. So any one of these could provide support if the index continues to go down. So the first test would be here at the swing high, then over here at this swing high. The next level is at the spike low that we talked about at 98.35, and then we have three of them in a row right here, all on swing lows. You can see here that the stochastics is in the overbought area, and it looks like it's turning over a bit, stagnated a bit here just at the upper band of the stochastics. We do have a bearish divergence. It's not huge, but there is a bearish divergence in the MACD, and it looks like the MACD histogram is moving back a little bit toward the zero line as well. Volume picked up this past week, so we are actually fairly consistent with what the volume is doing. So the market really does not know what it wants to do at this juncture. It put in a doji today, and that is indecision on fairly reasonable volume. So we can be pretty well assured that the market really does know what it wants to do. So we just need to follow it. If it breaks up above this resistance line here, the aforementioned resistance line at 10,440, then we need to be concerned that it's going to continue up. Not nearly concerned, but we need to follow it and recognize that the market's going to do what it wants to do, and it's probably going to come back up here and test and retest this swing high that was put in back here in January. But my thesis is, and I continue to feel this way, that it's going to come back down and retest. So with that, we're going to move on, and we're going to talk about the SPX.